Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Paula Smith, Senior Vice President and Head of Retirement and College Savings Strategies with Voya. Paula, it's great to have you with us. Welcome to Trade Talks.
Great, thank you. Glad to be here.
Can you tell us a bit more about the Tomorrow Scholar 529 Wisconsin Savings Plan?
Sure. So Tomorrow Scholar is a college savings plan that's available nationally. We offer it through investment professionals. We think financial advisors can be really valuable as people are looking to save for college, plan for college, and choose their investment options. We have a multi-manager approach at Voya. Our investment team uses best-in-class managers across a wide variety of asset classes, including a mix of active and passive. We think that's valuable to investors. With our program, we have three ways to invest, a lot of flexibility. We have age-based options, which help guide people from the child's early years until they're approaching college. Age-based options get more conservative over time as people have less time that they can afford to experience down markets. As well, we have 5 risk-based options and 30 single fund options. This can help people create a portfolio of their choice. The risk-based options are particularly helpful for people saving for K-12. We're really proud of our program. It has strong long-term performance, and we've been managing it since 2012.
As part of Nasdaq's College Savings Month series, we are looking to educate our viewers about everything from the importance of saving for college to informing our viewers around what is a target data series and the differences between direct sold plans versus advisor sold plans. Can you educate us on how to take tax-free qualified withdrawals from a 529 plan?
Sure. So, I talked a little bit about flexibility. One thing that I emphasize when I talk to people about 529 is their flexibility. And so when you invest money in a 529, it grows tax-free and it's distributed tax-free as long as it meets a qualified expense. And so those distributions, a qualified distribution includes college, which includes tuition, room, board, books, fees, expenses related to the college. It also includes off-campus housing, which we hear about a lot. But we've also seen flexibility in the last couple of years where you can take distributions from a 529 tax-free for K-12. So for people who are enrolled in private school, you can withdraw up to $10,000 a year tax-free for tuition towards that program. As well, recently we added a couple of other qualified events. One is to take money qualified tax-free for apprenticeships. So we see more and more students moving that way. They don't necessarily want to go to college right away. And we also see student loan debt. So you can take up to $10,000 over the lifetime to pay off student loan debt, either for the beneficiary of the account or that beneficiary's sibling. So again, lots of flexibility in those programs.
What are some of the benefits Tomorrow Scholar hopes to see as part of the relationship and additional transparency through the partnership with Nasdaq?
Sure. So we now have searchable tickers for our investment options. We didn't have that before. And so that puts us on a level playing field with things like mutual funds and stocks and ETFs. So people can go online or they can go to a brokerage account and actually search for our options using a ticker symbol. So we think this provides a lot more transparency. This pricing information is available to the public. They can see it on a real-time basis. It's also valuable to advisors as they're looking for our information as well.
And to wrap up here, what are some of the most important questions parents and caregivers should be asking their advisors when saving for college?
Sure. So like most aspects of investing, I think advisors can be invaluable as parents map out a college saving strategy. So you want to look at college savings in the context of overall financial goals. People are saving for a lot of things. They're saving for retirement. They're saving for a house. So how do you balance all of those different financial needs? But you want to talk about how much do we need? And so there's a lot of tools out there that can help people figure out how much they might need for college. And then how much can we afford to save in the context of our other investments or other savings? And then what's the best way to save? So we think 529 is the best way to save for college, given the tax-free benefits and the flexibility, but there's other ways to save as well. So talking to the advisor about the best way to save, and then talking to the advisor as well if they're recommending a 529 plan. Why are they recommending that plan? What are some of the state tax benefits? Does the plan have strong investment options using multiple managers, strong performance? Does the plan offer strong tools like website calculators, and different things that folks can use to grow their account. So we think, working with an advisor is just really helpful in the process, and it really does help people hone in on their real goals, and really at the same time avoid that student loan debt.
All right, Paula, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much. Have a great day.